Good afternoon, everyone. We're gonna get started. Thank you for joining us. I'm Brahima Coulibaly, the Senior Fellow in Global Economy and Development and the Director of the Africa Program. And it's really our distinct pleasure and honor to welcome the high-level delegation of the Africa Development Bank for an interesting discussion around their Economic Outlook report, which came out earlier in the year. The delegation is being led by the Senior Vice President and also the Vice President and Chief Economist of the institution. The President himself could not make it to this spring meeting, so if you're expecting to see someone in a bow tie, it will be maybe for some other time. Right? In terms of the flow, we're going to have the Senior Vice President first provide some introductory remarks, and then that would be followed then by a presentation of the outlook itself by Seamless Abebe, who is the manager of the macro division and also the person who coordinated and led the report. And afterwards, a distinguished panel will join me on the podium here to provide their reactions. And I'll be sure to leave enough time at the end to get in as many of your questions and comments as possible. So without further ado, Mr. Vice President, you have the podium.
Cool, Dr. Brahima, thank you very much. Good morning, distinguished ladies and gentlemen. Welcome. Welcome to this presentation of the African Economic Outlook. It's my pleasure and also my privilege, actually, to welcome you all on behalf of Dr. Adeshina, who cannot be with us this morning or this afternoon already. Let me start by first thanking Dr. Brahima Coulibaly, Director of the African Growth Initiative here, and his colleagues for providing this very visible and very impressed by the turnout, this very visible platform for us to discuss a bit the AEO, the African Economic Outlook for this year, the 2018 edition. And as you know, our collaboration with the AGI goes way back. I'm pleased, we're particularly pleased with this year's report. Well, we're pleased with every year's report, but this year's report is particularly special for us, and special in terms of the contents, as most of you, those who have seen the report already, the contents have been quite a bit streamlined. Secondly, this year, the report was, and thanks to the team led by Dr. Celestin Monga and Abebe, and also just joined the team Hanan, who's sitting in front here. It was basically produced by the team entirely. You know, in the past we've had the different sort of collaboration arrangements, and this was one that was fully owned by the chief economist and his team. So kudos to them, and we're particularly pleased with the outcome. And then the third, which is probably obvious, should have started there, is the launch date. You know, the president, if he were here, he probably would have said, you know, what's the point of having a, you know, usually in the past, we used to launch this at the annual meetings of the bank, which is in a month from now. And so what's the point of an economic outlook that is launched in the middle of the year? So this year it came out in January, and this is going to be the practice going forward to come early enough to be useful to those, to the many that use the report. So these are three distinct features of this year's report that make us particularly proud. Of course, the main topic of this, infrastructure financing, always timely, but even more so now, as we look at our High Five agenda, which I will not get into. I think most of you have heard about the bank's 5 priority areas. Is very, very timely in terms of what we're trying to do, the implementation of the High Five agenda. As you see in the report, and I will not get too much into the details, I don't want to steal Dr. Abebe's thunder when he comes to the podium, and of course the panel will be discussing at length. But many highlights, of course, the continent, as you all well know, was growing well above 5% until 2014. And although, of course, there was weaker growth in 2016, the African countries have recorded higher growth, around 3%. And it's worth noting that there, of course, within the aggregates are also the differences even within the regions and even between countries, where 15 countries recorded growth rates higher than 5%. The outlook for us for 2018 and 19 is positive, and growth is expected to reach around 4.22%. And then, of course, foreign direct investment, FDI, has increased significantly. It used to be way back, I guess, in the 90s, around 2 billion. And now we are looking at 59 billion in 2016. We still need substantially more, of course. And part of that is also, of course, and the panel will get into the details, of course, in the improvements of macro environment, etc. Many African countries now have sovereign ratings from 10 in 2013 to 26. It's doubled in 2017. So we can talk about the resilience of the continent, but of course we also acknowledge that there are challenges, and the growth rate needs to be substantially more than what they are currently to make a dent in the poverty picture, which is what we are all about, which is what on a daily basis that's what we worry about. How do we, working with all of you in this room, our countries, to essentially make this significant dent. The outlook, the report also talks about the infrastructure gap. I mean, how many times have we gone to similar gatherings, and then the famous ICA report, the 100 billion, where we think it's substantially more than that, where we think the needs are somewhere in the 130 to 170 billion range. And the financing gap is in the 68 to 108 billion. So the amounts are substantially higher in terms of what is needed to make a dent in the infrastructure picture, which is, of course, it's an absolute necessity for the industrialization, of course, of the continent. Now, to tackle this, there are an array of options, of course, that are available to African countries. There is, of course, a challenge, and there's a lot of work that the bank has also been doing to work with countries. In the area of domestic resource mobilization, it's a huge, huge area that a lot more work needs to be done, in my view, to essentially optimize that source of revenue to address. In fact, that is, in terms of the sustainable financing of Africa's development, clearly, if you haven't addressed that problem, there's no way you can expect to have a sustainable financing picture with regards to our development financing needs. So there is that. There is, of course, all the work that is being done to improve the environment to attract a lot more private sector participation. In that regard, the bank, for example, is launching the African Investment Forum, which it's going to be a platform that is going to be launched formally in November in Johannesburg. And the point of that is bringing all the parties together to essentially substantially increase the further development of bankable projects, and of course the financing of bankable projects. And it's a platform that we have many of our development partners coming along with us from all the regional development banks, the AIIB, etc., working together to create this platform. And I'm sure at some other time we'll have the opportunity to talk some more about the African Investment Forum. So this, ladies and gentlemen, are just a few remarks about the report that we are particularly proud about this year. Again, about the timing, the content that has been substantially streamlined. And already our member countries, our ministers, many of them have the reports I might even add that for the first time, the team is, at least the executive summary of the report is has been translated in, I think, 3 of the most widely spoken languages on the continent, on Kiswahili, in Hausa, and in Arabic. So, I mean, this is, and the chief economist told me that he did personally check the quality of the translation in all 3 languages. I kid you, of course not, but we had some good quality assurance that these have been properly translated into these languages. But more seriously, the point of that is to make this, I would even argue that is part of the inclusiveness agenda. I mean, clearly, you want as many people to be in the discussions. And the more we can have this available and can be read by more people in their own languages, the richer the debate, the richer the conversations that would take place. Ladies and gentlemen, I don't want to take too much time because I know we'll have the opportunity to get some more into the details of the report. But I wish to just, on behalf of Dr. Adeshina, President of African Development Bank, thank you so much for being here. And we look forward to a very rich conversation this afternoon. Thank you very much.
Good morning, SVP, Madam Dignitaries, ladies and gentlemen. So allow me to thank Dr. Brahima Coulibaly for providing this excellent platform to talk about one of the premier flagship reports the African Development Bank has been producing for the last 15 years. I've been here, I think, 3 or 4 times before, just in this similar event. So we are very grateful for the Africa Growth Initiative to always think about the African Development Bank and strengthen the partnership, but also going beyond that to influence policy and advocate also on behalf of Africa and its people, hopefully the right image and the right perspective that can be beneficial, not only just to Africa, but also to development partners here in the US and across the world. This report has come, I think, at the right time in terms of content. We are talking about infrastructure financing in Africa. It's not new. Several reports have been published. But probably what we have done here is take a step back and say, everyone in this room knows that infrastructure gap is not just a unique perspective of Africa, but rather globally. Today, people estimate in trillions of dollars of financing gaps. So it's going to be a permanent feature of any economy. I believe here in the US as well, the infrastructure deficit and the estimates that have been made are also significant. What's different for Africa is the critical basic infrastructure that is required to sustain and keep the economies of Africa competitive and also build a solid economy that has a great potential. I mean, when we speak about Africa's growth potential, it's enormous. There is no limit. Actually, I see that continent a place of infinite possibilities. It's just amazing what that continent has in store. So this discussion, this report, brings out those issues to the forefront, but also gives us a caution in terms of what are needed in financing infrastructure in Africa, the innovations, the collaborations, the partnerships, the financial architecture that is needed. So I hope by reading this report, all of us will be informed and together also we learn more. And this kind of platform is also important to get more views and perspectives that will help us sharpen the next edition of the African Economic Report. In this presentation, I'll try to be very brief, so don't It's not because we just want to shy away from the issues that are covered, but rather to give a chance to the panelists, but also to the audience to discuss with us some of their issues. This report, the African Economic Outlook, has three main components. One component, we call it the main report. The second component, which is a new feature we have brought in this year, the Regional Economic Outlook. And then we have another one we call a country note, covering 54 African countries. When you put it together, this report goes into thousands of pages. So most of it is online. It's a very rich resource to researchers, investors, and academics. And also this report has been widely used, including by the media. Recently, CNN and others featured the main message of this report. Today, we'll just talk about the main report, which has two parts. One is basically looking at the economic outlook of Africa, digging deeper into jobs and links with poverty and inequality, but also looking at the issues of infrastructure finance. As the Senior Vice President of the African Development Bank has just said, Africa has been growing. Actually, since 2000, the last 15, 20 years, we know the continent has started to move in the right direction. There has been a lot of hope and what we call the African Renaissance. However, since 2013, there has been a dip in growth just because of the collapse in commodity prices for some countries and the slowdown in the global economy. As a result, the outlook for 2017 and 2018 is really a recovery from that slowdown. We expect next year and this year growth in GDP to be 4.1%. Now, the main question, of course, is what are the proximate drivers of this growth? Improved global economic condition, which I have said. And African countries have been improving their macroeconomic management. And then there is the domestic demand, which has been the source of growth in many African countries. And hopefully that domestic demand eventually will shift into growth in exports and investment. When we think of Africa, it's 1.2 billion people and 54 countries. So we have so much variation. If you look at the map, the East, North, West, Central Africa, the growth performance is really very much wide. And as a result, you can see for the last 5-10 years, the East Africa region has been the fastest growing region. In the last couple of years, West Africa has lagged behind, just partly because of the collapse in commodity prices and affecting growth in countries such as Nigeria. Then you have the Southern Africa, which is weighed down by the slow growth, anemic growth that characterized South Africa for a long time. So basically, in this report, we try to project and provide estimates of growth outlooks for all of the 54 countries. Now, what this report is motivating is beyond the growth forecast. When you look at the average trend in Africa, there is this, what you call slow pace of capital accumulation, which is really affecting the continent's growth, is supposed to be supported by debt. So debt is supposed to provide an instrument for investment. However, recently we are seeing a surge in the level of debt in the continent, which we take seriously in understanding the dynamics. But most importantly, in infrastructure finance, the two are closely interlinked. As mentioned earlier, Africa's fast economic growth has not generated enough jobs. I think this is a story repeated so many times. We don't need to say whether this fact is true or not. What's important is what is preventing for growth not to generate enough jobs. One of the reasons we have identified and also reported in this Outlook flagship is that the growth acceleration and the slow pace of structural change seems to be impeding job creation and poverty reduction and inequality reduction as well. Therefore, there is a lot of interest now in Africa to talk about structural transformation. The reason is structural transformation assisted by faster infrastructure is a source of inclusive growth. I think the evidence we are highlighting here shows that countries that have a better infrastructure tend to have also low inequality. But also there is a policy oversight in Africa. If you look at, for instance, access to electricity across the board, African countries tend to suffer more than any other region of the world, despite the level of comparable per capita GDP. So this also tells you that there is a lot of room for improvement, at the same time also how far behind we are. So these slides are basically also to show how critical infrastructure development is, because Africa's capital accumulation has been moving very slowly. Now the question is, yes, the first thing to do is how much Africa needs to bridge its infrastructure gap. This report, for the first time, reports a new estimate, 130 to 130 billion a year is required. Most of you may ask, how did you come up with this? How different it is from previous ones? We can discuss this. The most important part, however, is that when you compare the way Africa invests in infrastructure compared to other regions of the world as a share of GDP, Africa is still investing low, less than 5% of its GDP. And the gap is the largest anywhere else in the world. Therefore, the criticality of infrastructure gap is more relevant for Africa than elsewhere. In this report, you'll find how much, for instance, the continent invested in 2016, where we got the reliable data. You could see that half of what is needed was invested in 2016. As an example, 62.5 billion, and spread more or less equally across all regions except the Central Africa and Southern Africa regions. When you look at where the money has gone, at least from the information we got, and the sources where it came from, you could see that governments spent on infrastructure less than 50%. So most of it has come from other sources like the ICA, which earlier mentioned by the Senior Vice President. But also China has provided significant amount of infrastructure financing for Africa. And largely it went to Eastern and Western Africa regions. Now the main question that we try to answer in this report is, what is the way out of the financing constraint for infrastructure in Africa? So we have provided detailed analysis of the reasons why we are getting so low infrastructure deficit in Africa. What are the risks, for instance, that investors perceive when it comes to financing infrastructure projects in Africa? Governance issues, institutional regulatory issues, but also procurement issues. There are so many detailed elements in this report that you find interesting because it's very open, and we have not tried to just sell Africa by window dressing. It's a challenge we have brought out into the picture. We have not minced our words, we just said the way it was. So it's a very good report for you to see that infrastructure financing is not simply we are trying to tell a rosy picture. Rather, we've been very hard on our policymakers in terms of the things needed to be done. The most important thing, I think, in conclusion, what I would say is in this report, yes, we have identified the risks, we have identified the challenge, we have also provided some possible solutions that that policymakers and decision makers can take into account. One of it is, as most of you know, money is not in short supply in this world. the global saving glut. There is money sitting, earning almost zero interest all over the world. It's estimated $100 trillion, more than that. Africa's deficit is just 100 or 60 billion a year. So why not tap into this sitting money that is floating around in the world? So in this report, we provide a framework how this could be accessed by African countries while providing also high interest rate for the investors. So it's going to be a win-win situation. Just to give you an example, take Norway, which has $1 trillion somewhere sitting, earning nothing, literally. And yet, Norwegians, I believe, will be very happy to see their money invested in Africa, so long as it brings returns, but also improves lives in the continent. This kind of social and financial contracts can be designed in such a way that not only Africa becomes a source of investment and a source of earnings for other peoples in the world, but also eventually it becomes a pole of growth and development for the rest of the world. So with this, I would like to just conclude by saying the institutional architecture, the financial architecture, and most importantly, the leadership that's needed to convince investors to have a bankable asset class infrastructure projects is very critical for Africa's infrastructure development. So at the end of the day, the ball is in our court, not in the rest of the world's court. So the African Development Bank advocates and also campaigns for change in attitude and perception, but also not only within Africa, but also outside of Africa. Thank you for your hearing.
Thanks for watching. Be sure to like and subscribe for more videos from Brookings.